Hi, this is retired Revenue Officer McCary coming to you with another episode of Talkin' Tax Smart. Today we're going to look at the overall picture of the Internal Revenue Service from a foundational standpoint and begin to look at some of the major changes that have taken place recently that we live with today. Now, I don't think it's necessary to go into a large historical look at the forming of the Internal Revenue Service and how it's changed from 1862 through Abraham Lincoln all the way up to present. But there have been some significant changes along the way. It's a uh, historically interesting note that there have been no major tax law changes that have taken place under the Democrats since Lyndon B. Johnson in 1964. More recently, the two major changes that took place in regard to tax law were under Ronald Reagan in 1986, where he adjusted the rates and brought about a tax reform, and then in 1998. Now, 98 through 2000 is significant because the entire structure of the Internal Revenue was changed, specifically through 1998 legislation and that it was the Tax Reform Act of 1998, and then again in 2000, where an adjustment was done. So prior to 1998, the Internal Revenue Service was pretty much, um, I wouldn't say regulated because it's subject to the tax laws, but they were something that nobody really wanted to touch. Uh, we'll go into this in a later episode, but the revenue officer in the Internal Revenue Service prior to 1998 was probably the most powerful law enforcement officer in the United States. Now, and we'll again go into this in a later episode as regard to the significance of revenue officers. But suffice it to say, revenue officers enforce civil tax law, not criminal tax law, but civil tax law. And so that means that in civil tax law, there doesn't have to be a lot of due process involved. So that's one of the reasons why most of the issues regarding violation of tax law for normal citizens are going to be, on non-payment of taxes, non-filing, those types of issues are done in a civil manner because the Internal Revenue Service can act quickly in order to try to resolve or push resolution of an issue. So the prior to 1998, the revenue officer had the ability to go out and seize property, to seize any type of asset. Even there was even some policies which were in place, which admittedly were not good policies. They had a policy, for example, called knock and lock, where they could simply, if you owed the Internal Revenue money, they could simply knock on your door and tell you that your house was being seized, or they would invite people to come down for an interview, and then they would watch to see the type of vehicle that the person was driving, and they would, while the person was in an interview, seize the vehicle. I mean, they basically had the ability to seize without any due process assets if you owed the Internal Revenue Service. In the year 2000, there was a significant court case that took place that kind of ticked a lot of people off. And so, in, well, 1998 really, and then it finally got signed into law in the year 2000. But basically, what happened was that there was a number of agencies involved in the raid of an individual, and the IRS kind of tagged along, but was not the lead on it and did not really involve themselves highly. And yet, the media made a big to do about it. And so, because of that, Congress got all up in arms and decided they were going to curb the way in which the Internal Revenue Service operated. So, under the commissioner at that time, Charles Rosati, basically they put into place a reform act which stopped the aggressive behavior of the Internal Revenue Service in regard to a collection of debt. So, for example, they could no longer do no equity seizures. They could not do again knock and lock. They could still levy, they could still lien, they could still do all of those things, but as the ante upped, for example, you had to go through more and more review. And I probably took the Internal Revenue about 2 or 3 years to figure out legally how they could operate and what they could do. So when I became a revenue officer, I became a revenue officer subject to these changes. And so part of one of the things that we were trained on and we had to deal with was the fact that we had to observe taxpayer rights. We had to make sure that people understood why they were being collected against and what they owed and whether they agreed or didn't agree with that. And if they didn't agree with it, then we were under obligation to go back and to figure out why they didn't agree with it. And sometimes that was appropriate. For example, again, remember non-criminals. So if somebody failed to file a return, but information returns were provided for us to show us that they had income, then we would file a return on their behalf. And once the return was filed on their behalf, then we could collect against it. But when you go out and you talk to somebody and they say, "Well, I, I didn't file a return. I don't know what's going on." So you would have to go in and you would have to work with them in order to help them understand why they were being collected against and give them opportunity to correct the situation. So after 1998, and it actually signed into law, that basically took a lot of change that came about in regard to how the Internal Revenue operates. Now, the Internal Revenue still operates today within that fashion, again, because they brought in somebody from the outside named Charles Rosati. And Charles Rosati was a businessman, and he set up the Internal Revenue into four business divisions or four business units that they would operate within. And so those business units are large business and international, small business and self-employed, tax exempt and government entities, and then wage and investment. So most people today fall within the category of wage and investment. If you're an individual taxpayer, you fall within the category of wage and investment. If you're in business or you're self-employed, then you would fall under small business self-employed. If you ran an exempt organization, you would fall, like a church, for example, or a parachurch organization, you would fall under tax exempt and government entities. And then, of course, don't forget that international is covered by large business and international. And that's because of the fact that, taxation occurs worldwide. So if you're a U.S. citizen or you're a U.S. company, then you're going to be subject to taxation regardless of where you live. Now, there are provisions for how you might deal with that so that you're not double taxed between that country that you're living in and where you're living in now. But as a U.S. citizen, you still have an obligation to file a tax return if you meet the criteria to do so. So those four divisional operations, then each one of them have within them certain individuals that you as a taxpayer might come in contact with. The change that took place was significant, again, because the Internal Revenue Service was trying to figure out the direction that they were going to go and how they were going to implement tax law so that they might collect the taxes that are due. So, one of the things that we're going to be doing during the next, I would say, several episodes is we're going to be exploring the individuals that are within these different groups and how you, as a taxpayer, might be affected by that, particularly when we're talking about individual taxpayers or small business taxpayers, the types of individuals that you might come into contact with when you're dealing with, these different groups, what group you would fall within, and who within the Internal Revenue Service you might come in contact with in resolving issues that you might have. Now, the other group that I didn't mention, which is a specialized group, is under the Taxpayer Advocacy. And a Taxpayer Advocate's Office was formed in order to give people who could not get their problems solved a mechanism by which they could come to the Internal Revenue Service with special consideration, have somebody assigned to getting their problem solved, and then have that problem solved by a specialist who did nothing but work with various elements within the government to resolve whatever the conflict might be. Now, let me just say this in closing this particular episode. The payment of taxes is foundational to how we operate as citizens of the United States. And I know it's not a sexy discussion. I know that it's not a discussion that people just think this is so fascinating, and it can be interesting, but it can also bore people to death. My desire is not to bore people to death or to make this overly sexy. My desire is for it to be understood better by people how our tax system functions and how you play into that. Remember that there are two things that you cannot get away from in regard to how we live in life. And one of those things is, of course, death. Everybody's going to die. You're going to die, regardless of whether you think you are or not, whether you're a young person or you just think that you're invincible. Let me guarantee you that you are going to die. And the consequences surrounding death, there are those three philosophical questions that everybody has to deal with. Why am I here? Where did I come from? Where am I going? Those types of questions are answered philosophically and theologically. And we're not going to go into that in this podcast. I have a different podcast that I deal with those types of issues. Instead, we're going to deal with the one that you can't get around, taxes. The two things that you can't avoid, death and taxes. And as I stated in my last episode, and will continue to remind you, the basic theory behind taxation, regardless of the country that you live in. Look, any country that you're going to go to, there's going to be some system of taxation. Any city that you live in, there's going to be some system of taxation. Any state, any county, obviously federally, there is a system of taxation because that taxation allows you as a citizen to be able to group together or pull together sums of money so that the government can function in an effectual manner. The Internal Revenue Service is probably the most, now this is venturing into my opinion, and that's fine, but the Internal Revenue Service is probably the most effective form of taxation in the world. And the Internal Revenue Service is the most effective federal agency in existence. Now, what's that opinion based on? I want you to think for a second, just if you will, or close your eyes. We're not gonna have a meditation practice here, but close your eyes, and I want you to just think for a second. Everything, every person, every building, every truck, everything that you see around you, the moment that you step out of your house, you are going to see cars and trucks and buildings and businesses and individuals, all of those individuals, whether it's an individual person, whether it's children playing, the potential is there, whether it's, people at schools and adults, and you go to a business, all of those individuals in the business itself, the trucks that are on the road, everything that you see around you in one form or another is affected by the Internal Revenue Service. I want you to grasp that, as it were, and to think about how overpowering that is. And yet, this agency, which exists within the federal government, is currently, the numbers are some. Of course, they're fluctuating as employees come and go, but they are basically, they have about 90,000 employees. Now, in the last couple of years, there's been a reduction because of attrition and people retiring and not having the money to hire people. But nonetheless, in the year 2023, there's been a concerted effort to beef up the numbers for people that work for the Internal Revenue so that they can administrate taxation. That being said, I want you to think about that for a second. There are over 200 million. I think I heard the number the other day, something like 238 million or something like that. Or was it 338 million? I could Google it and look it up, but there's a lot. There's a lot of people, particularly now that we have all these people that are flowing in from other places. That's a lot of people. And yet, the agency that's responsible for collecting tax, for administrating the tax laws within the Internal Revenue Service, does it effectively with basically less than 100,000 employees. That's amazing. That's truly amazing when you think about that. So the Internal Revenue Service, we're going to explore in more detail foundational issues as to how it is that it functions, so that you can be better informed as a citizen. If you like the content that you're seeing and you think that it could be helpful, then hit the like button, or better yet, subscribe, so that when a new episode comes out, you'll be able to check that episode out and see if it might help you. Because remember, we're not only going to be dealing with the structure of the Internal Revenue, we're going to be dealing with different aspects of personal tax return. We're going to be dealing with issues of collection and how collection functions. We're going to be dealing with how to advocate for yourself if you have things that happen that you're going to need help with to get it resolved. We're going to be dealing with all those things through many of the episodes that are coming up. So subscribe so that you'll be able to know that a new episode is coming. And remember that the basic theory behind taxation: if you're going to pay, you're going to play. See, did I say that right? That's reversed. If you're going to play, you got to pay. We'll see you during the next episode of Talking Tax Smart.